Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's talk munis because why not? It's Friday, and that's what we do here. Craig Brandon joins us, co-head of municipals at Morgan Stanley Investment Management up there in Boston, the former Eaton Vance shop, one of the best, I think, best franchises up there in Boston. Eaton Vance, been there forever. Craig, talk to us about the municipal bond market. How's the year unfolded for municipal investors?
Yeah, volatile year so far, like other fixed income. We were sort of plugging away in January and February. March hit and the war hit, and, we traded off, as did a lot of other asset classes. And we got a lot of it back in April. So, we're sitting here up about 100 basis points on the year, slightly outperforming some of the other fixed income asset classes that are either flat or down slightly. But, really, almost nothing to write home about it at this time if you look at being up 100 basis points year to date.
In general, Craig, where are we in terms of seasonal factors? I know that for the muni market, there's a lot of periods where there's demand coming in or supply really takes a dive. Where are we in the seasonal factors that we need to pay attention to?
Yeah, so we're almost pedal to the metal on both sides of technicals, right? So supply side, very strong, $173 billion year to date on the tax exempt side, and that's up 16% over last year, which was an issuance record, right? But at the same time, we have $29 billion into the market year to date of new money, plus coupons and things like that. So year to date, we're setting a record on inflows between mutual funds and ETFs that doesn't even count separately managed accounts, which is balancing the record supply that we're seeing. So, technicals, I would say, are balanced and they're very strong on both sides. So the key this year is we think that issuance will continue to be strong. We continue to need to see the money come in to balance that out for the rest of the year. So far it's been fine, and flows still appear to be strong. So we're hoping that dynamic continues.
Craig, talk to us about credit quality. It's really been quiet on that front. Thankfully, we haven't really had any big credit concerns. Just give us a sense of what the current situation's like.
Yeah, so states really drive the show on a lot of stuff, right? States give assistance to locals and municipalities. The economy's been stable, as we've seen, right? So states came into this with a lot of cash. Municipalities are pretty flush. Remember, in munis, we are different than treasuries. Pursuant to state constitutions, municipalities have to have a balanced budget every year. You might not like how they get to a balanced budget, which is when people talk about the gimmicks, about the one-time, financing things that municipalities do. But they do that because they can't deficit finance. So every year, the states and municipalities come into the year with a clean slate and a balanced book. You can't deficit finance. So credit remains strong. There's some sectors that we're watching, right? Some of the smaller colleges and universities, Bloomberg has reported many times on some of the small independent colleges that have been shutting down. And we're watching some of the smaller, more rural hospitals with all of the Medicaid cuts from the One Big Beautiful Bill Act that could be impacting them. So, really, those are the things that we're looking at. But, the big colleges and universities are still very stable. The bigger hospital systems are very stable. So you just sort of need to pick your spots and watch out for a few things. But, overall, muni credit is pretty strong.
Within higher ed, schools of all stripes are looking to raise money, but are the big schools that have a big endowment, are they just as likely to need to go tap the muni market as the schools that maybe face some of the demographic issues?
They are. I would say one thing to remember, tax exempts, you can't issue bonds just to put on your balance sheet, right? They have to have a specific capital purpose. You need to itemize the capital purposes for construction, basically. The taxable market, right? There's about an $800 billion sleeve of munis that are taxable that primarily international investors buy. Think of Japan, Korea, Europe. That's where they can issue bonds. So what we're seeing is, yes, the big universities Listen, the big, strong universities are still an arms race. You want to have the nicest dorm facilities. You want to have the nicest research facilities, right? So from the tax-exempt side, there's definitely an arms race where the strong are getting stronger. On the taxable side, yes, we're definitely seeing universities come in issuing bonds to just put on their balance sheet to just remain strong. But, I mean, you know, the strong are getting stronger and almost the weak are getting weaker in colleges and universities. And that's demographic driven, as, again, Bloomberg's reported a number of times.
Yeah.
On the decreased amount of high school graduates every year right now.
Yeah, kind of like the economy and the other industries as well. Craig, where do you want to be on the curve?
You know, listen, 15 to 20 is a real sweet spot right now, even out to 22. So if you go from 15 to 20 years, you're picking up almost 11 basis points every year you go out, which is a steep curve, right? And then when you go out from 22 to 30, you're only picking up 18 basis points to go all the way from 22 to 30. So, you know, 15 to 22, you almost want to be in that like 20 to 22 range, because that's the steepest spot. That's the most attractive spot. And it's, you know, significantly steeper than the Treasury curve for, you know, market dynamics, where separately managed accounts and ETFs, which are seeing a lot of flows right now, they generally don't really buy past that 15-year spot. So that makes 15 to 20 really, really attractive.
Craig, thanks so much for joining us. Really appreciate it. Craig Brandon, he's co-head of municipals at Morgan Stanley Investment Management up there in Boston.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.